Hey guys, today we're going to do something a little bit different. Today we're going to do a Q&A. So what I've got off screen are some questions that have been posed to me. I'm going to try and answer them as candidly as I can. Question 1. What do you think is the most important thing to get right if you want to create wealth? I would say the honest answer to this is that creating wealth requires a multifactorial approach, right? You can't just do one thing. But if I really had to condense it down to the thing that I think is the most important, it's really action. Taking action is fundamental. Many people think about wealth, they read about wealth creation, but they just don't act. And I would compare it to the analogy of going to the gym. I think most of us know what we have to do in order to build muscle. You have to go to the gym, you have to lift weights, you have to eat well, and then you have to rest. And if you do this in a methodical and consistent manner, you will build muscle. Wealth creation is much the same. It's about understanding what you want, developing a plan, and then pursuing that plan, and then taking opportunities on a consistent basis as they're presented to you. Spending 1 year sprinting towards wealth creation probably won't do it for you. Whereas if you take a 10 or 15 year approach and you say, every year I'm going to do exactly what I can to move myself forward towards my goal and don't leave any opportunity unexplored, then very likely what you'll find is every year something is presented to you. Perhaps this year you can buy an investment property, the year after you invest in some shares, perhaps you're investing in leveling up your own skill set so that you can level up your income. And then over time, this accumulates and you develop a habit of consistently approaching your own finances from a strategic perspective, which over time and with only a little bit of luck produces quite a lot of wealth. So once again, boiling it down, consistency of action, actually taking steps to build wealth is what I would say is the most important element of wealth creation. Question 2, what mistakes do people make most with their finances? I would say a devastating effect or mistake that I see quite often that has pretty significant cash flow and tax impacts is people not quite understanding non-deductible and deductible debt. The cash flow difference between these two is really fundamental. The tax difference between these two is fundamental. If you don't quite know what you're doing with debt, that's deductible versus non-deductible, it's very easy to make a mistake. And then once you've paid down deductible debt, you really can't remediate that. I had a client once who had about $800,000 worth of debt on an investment property. They received an inheritance, and rather than putting that money in an offset account, they just put it on the debt. They thought, I'm just going to park it here for a couple of days, I'll put it on the debt, and then I'll put it wherever else I want it for the long term. Now, unfortunately, what happened is they paid down that debt, and when they borrowed it back to actually put in an offset account on their principal residence, the purpose of that debt was no longer for the acquisition of an income-producing asset, and so there was no tax deduction on that anymore. If you think about that at a 5% interest rate, which I think is what the rate was at the time, that's $40,000 a year of income tax deductions that were lost. This happens quite often, whether it's in this particular pattern where debt is paid down, or through a failure to originate debt, or through a failure to really preserve debt over time. I would say that's probably the most common mistake that I see that's relatively consequential. Other common mistakes that I see would be more failures to implement things appropriately. Estate planning being left unattended to for years and years and years, even when people have children, or potentially people setting up incorrect business structures and then having some short, medium, and long-term tax problems off the back of that. They're quite common, but number one is definitely not managing deductible and non-deductible debt well. Number 3, is there anything you would avoid in general from a financial context? Different financial investments, accounts, structures, strategies, they're all tools. I would say in principle, I don't avoid anything. I just try and make sure the tool is right for the job. You could have a knife, and a knife can be used to hurt someone, or it could be a scalpel that's used to save someone's life. So in the right or wrong hands, the right or wrong tool can be positively or negatively consequential. However, having said that, certain tools or products can be more dangerous. An example of this would be a margin loan. So for those of you who don't know, a margin loan is a loan that's secured against shares and it's typically used to invest in shares and create a share portfolio. So you have the same principle with margin loans that you do with home loans. You have a loan to value ratio, you have a slightly higher interest rate. But the thing that concerns me most with margin loans is what's called a margin call. So if you invest utilizing debt originated from a margin loan, you'll have this LVR, loan to value ratio. If your portfolio falls down in value and you increase your LVR above and beyond what they call the buffer rate, then what's going to happen is you're going to get margin called. And that means that the bank is going to force you to sell down your holdings, or they're going to ask you to put more cash into that investment. The problem with this is typically the time that you get margin called is when the market's collapsed. So if the market's collapsed, the economy is in difficulty, maybe you've lost your job, the portfolio's down, and now you have to come up with more money, or they're going to sell your shares. Well, maybe you don't have more money, which means the bank is going to sell your shares. The bank is then crystallizing a price at the very worst time. Ideally, we'd be buying more at this point in time and not less. So a margin loan I use with a really high degree of caution, and if possible, I try and find a better solution for that particular problem than a margin loan. What have you learned in your job that you didn't expect that you would? I've learned a lot, and financial advice bleeds into a number of different areas of competency. I would say I learned a lot more about the law, legal structures, and general legal components that I didn't ever envisage that I would have to explore. They're a natural complement to financial advice. In addition to this, developing a strong understanding of broking and then tax. I also, at least when I first set out, didn't quite appreciate the degree of interrelationship between those things. But the thing that really caught me off guard was I'm quite lucky in a way and blessed to have the opportunity to speak to thousands of people and get an insight into their lives. And so the thing that I've most been surprised by is seeing the degree to which people are similar. Everyone has their own goals, everyone has their own fears and aspirations, but in talking to so many people, coming to understand that common thread through humanity and how we all love our children, want to support our partners, want to achieve something meaningful. I think that's a uniting force that I didn't quite understand before planning. And I think planning and the degree to which I benefit from exposure to a deep understanding of people's lives has really helped me. The market seems to be unpredictable. How do you get the confidence to invest? The market fundamentally is unpredictable. Anyone that tells you that the market is predictable is either lying to themselves or lying to you, right? Now, you can make an educated guess, you can develop a thesis for what you think is going to happen, but ultimately, there is a chaotic element to markets. We can't predict when a war will happen. No one predicted COVID. And so the thing to be careful of is analysis paralysis. I think understanding the way markets have moved, developing an understanding of the cyclical nature of markets, how different assets are more or less robust, and what to expect from different assets is fundamental. You'll never get to a point where you can see beyond the fog of war in front of you. This is just the nature of life and investing in general. Ultimately, you have to get to the precipice, the very frontier of knowledge, recognize that that's as far as you can go, analyze and develop a best practice portfolio, and then trust that that's been enough to see you through what's going to come. The positive element of the last 124 years, where we have really quite good data since Federation for Australia at least, is we've gone through some fairly significant economic, geopolitical and health issues as a country and globally. And so the recovery that the markets have experienced, both the dip and the recovery, I should say, that markets have experienced, gives us a high degree of confidence knowing, well, if markets managed to recover from World War I, if markets managed to recover from World War II, whatever comes, even though we don't know what it is and we can't foresee it, markets will probably recover again. It's not as simple as saying, don't worry and just jump in, but I think recognizing that there's only so much that you can do from a preparation perspective, and then a lot of the work has to be in how you interact with what's thrown at you is also important. Last question, number 6. I feel like no matter what I do, I can't get ahead financially. What can I do? There's a lot that you can do. I would say the first step is you need to learn the rules of the game. If you feel frustrated and you feel like you're not moving ahead, I would suggest that one of the things that's potentially letting you down is you don't have a strong enough knowledge base. Think about playing Monopoly. Forget about real life. Put real life to the side. Think about Monopoly. Imagine you're coming to Monopoly for the first time, you're playing, and no one explains the rules to you. You have no idea how this thing works, whether you can build hotels or not, the penalty rates for landing in jail, what doubles mean. You're playing this game, and no matter what you do, you just can't seem to win. I think for most of us, that makes sense. Your inability to execute an effective strategy in the face of an ignorance of the rules is probably what we would expect. Now, if you bring this back to your everyday life, the financial universe that we live in is significantly more complicated, more significant impacts on your life than Monopoly. And yet people don't invest time in understanding these rules. I know it's a big ask to say, become competent, become confident in your finances. But of all of the fields of knowledge, I would suggest that this is, if not mandatory, highly, highly recommended. If you can develop a solid foundation, whether through your own self-education, working with an advisor, or whatever avenue works for you, you're going to understand the rules of the game. You're going to understand what you need to have in place in order to be able to affect an outcome. Once you then have an understanding base, you can then act on that understanding. And then it's a combination of developing the understanding, developing the conviction to act, and then acting consistently. Everyone's situation is going to be different. What works for one particular person may not work for another, but that knowledge base is the best place to start. And then that will, to some degree, lift the fog of war or the fog that's surrounding you from the perspective of your lack of understanding of what to do next. I hope that's been useful. I hope you've enjoyed the Q&A. We'll try and do some more like this. I think it's an interesting format for you guys to explore different questions with us. If you have any questions, comments, or something that you're really interested in, put it in the comment section. As always, if you'd like to claim a free consultation with us, you can click the link below. My name is Amor Delabasic. Have a good day.